This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordiz. Thanks for joining us at XM.com. Wall Street continues to defy gravity. The S&P 500 cruised higher to close at yet another record peak yesterday, telling a much different story than the bond market, which has been feeling the blues lately. Worries that the Delta outbreak will take the wind out of global growth have been eclipsed by a sensational earnings season and hopes for more federal spending, reigniting the relentless bid in equities. And with global yields sinking, cementing bonds as an asset class with negative real returns, there is simply no alternative. Overall, the outlook for stock markets remains promising. Valuations have corrected a little with earnings going through the roof. The economic recovery is humming along nicely, and a multi-trillion-dollar reconciliation package from Congress doesn't seem to be priced in yet. The only real risk is the Fed normalizing monetary policy. Markets seem positioned for a tapering announcement around year-end, so if the Fed gets the ball rolling in September already, as Waller suggested recently, that could come as a surprise. Even in this case, though, any sell-off will likely be short-lived. Stimulus will be dialed back extremely cautiously. The last thing the Fed wants is to shock the market. Speaking of normalization, the Reserve Bank of New Zealand will probably be the first major central bank to raise interest rates this cycle. The nation's jobs data for the second quarter were released overnight and crushed expectations, sealing the deal for a rate increase in 2 weeks. If the RBNZ is truly as aggressive as markets currently believe, the Kiwi could be the next king of the FX market. In commodities, gold has been absolutely lifeless this week, despite some favorable macro developments. Real U.S. yields have been demolished lately, and the dollar has been a shade softer, and yet bullion has been unable to capitalize. In energy markets, oil prices took another hit yesterday. Investors seem to be repricing the demand outlook as the Delta outbreak threatens to kneecap emerging market economies and perhaps even hamstring China. That's happening against the backdrop of steady supply increases from OPEC. As for today, the ADP jobs report will set expectations ahead of Friday's non-farm payrolls, but even more crucial will be the employment subindex of the ISM Services Survey. This is today's Daily Market Comment. Thanks for joining us at XM.com.